Good afternoon. It's Brian Shannon from AlphaTrends Blogspot. It is Wednesday, the 15th of August, 2007, and the troubles continue for bulls on Wall Street. Yesterday, the S&P 500 closed definitively below that 200-day moving average, and today we saw the volume pick up once again on the downside, and we've got new lows for this sell-off, and we're now down for the year on the S&P 500. The SPY closed out last year at 141.62, so we took it out by a pretty good amount here, and now the market is down for the year. The S&P 500 that joins the IWM, which we'll take a look at in a minute. But the S&P 500, again, we've got a declining 10, 20, and 50-day moving average. This morning, I had mentioned that when rallies come in bull markets, they're often sharp and fail, like we saw right here last week or a week and a half ago. That rally was sharp, it was quick, and it failed. Now, today, midday, it looked like there might have been a chance for some buying to take place. But again, this market is only for the most aggressive, most disciplined traders. I've been mentioning that consistently. You can see where the market came up to. It came up to the morning lows as well as this downtrend line. And we've got a declining 5-day moving average. If the market was going to hold on to a rally, I wasn't expecting it to go very far, but I was prepared for it if it was. That's the difficulty with trading a bear market, is that when the rallies come, they're very sharp, but looking for them really is kind of a waste of time, because it's just like looking for a top in a bull market. It's no one really gets it right very often. If you're going to trade that type of setup, then you've got to be extremely quick. This is about where I had mentioned it. We did get a little bit of a rally, but again, it didn't even make it past the morning highs right in here, and we've got that declining 5-day moving average. So once again, it looked like the only thing that really saved the selling today was the closing bell. So we've got a market now that this S&P 500, looking at the weekly time frame, it's looking like the earlier in the year lows might become a test area for this market at 136. Don't think it can't keep going down just because it's down a bunch recently. There will be bounces, but those bounces are more than likely to fail. Let's take a look at the semiconductors. They had a tough day today. Applied Material had some bad news last night. And yesterday I said that I've been talking about this market as kind of being neutral in this area. Yesterday I said it looks like it's neutral but worsening. Today I'd say no more neutral. This thing is busted right here. It broke below the recent support. Now it's coming down that 200-day moving average, and it's just tough, no matter where you're looking at this market on the long side. And bounces that materialize from these oversold levels, now we've got the potential for a lot of resistance, most likely up near this $37 level. That's the level that was really taken out yesterday afternoon and added to today. And you can see we had a low volume rally followed by more bigger volume on the downside. So the sellers remain in control of this market, and it's just going to be very tough going forward to make money on the long side. Again, unless you're an aggressive and disciplined trader. Yesterday in the IWM, I had mentioned that they had broken this 76.40 level, and that was most likely going to lead to continued downside, probably a test of these lows near the 74 level. We're getting very close there, and you can see that the selling really picked up here in the last hour of the day. And volume increased on that decline as well. So we're starting to see a lot more fear creeping back into this market. And again, I point out that this 200-day moving average is acting as resistance near that 80.5 level, which is also where we had this prior level of support in the IWM. So again, if you're looking to be a value buyer, wait. Don't look at what Warren Buffett's doing, because that guy's got years to buy, and he'll wait years. But meanwhile, he's going to probably endure a lot of pain on some of those positions that he's adding to. Not that I'm calling Warren Buffett wrong, because his track record's great, but he's not a short-term trader. And the short-term trend, the market is busted. It looks like, again, on this NASDAQ 100, I said yesterday, it looked like this level should be tested at 46. But if we're going to test that level, we might as well, and we'll likely see a test of the 200-day moving average. that looks like it's really unfolding here. Let's take a look at what I was looking at intraday here. What I was looking at intraday was the market seemed quiet in here, and I thought it was going to rally. We were going to get a little bit of a squeeze rally. It rallied right up to this prior important level of support at the 47 level, and that support became resistance, as well as the location of the recent downtrend line here from the last week and a half or so. So there were sellers waiting for it to come up to that $47 level. They aggressively took control. Big volume increasing all the way down. And it's also interesting to see that if you look at pivot studies, that it was also the location of, that is the resistance near 47, is the location of the pivot as well as the morning highs. I think it reached a penny above that, maybe sucked in some new longs. But here's what I was looking at as well, was the breaking of this 2-day downtrend. Now, of course, that's not going to be good for anything more than just a quick scalp, and sometimes I wonder if I should even mention those trades, because overall, the market remains in a downtrend. Look at the direction of this 5-day moving average. If you're going to try to trade long and you've got a declining 5-day moving average, you got to get out very, very quickly before anyone else does. It's a nervous time to trade, but there can be good trades if you're disciplined and if you're aggressive. The QUID QID, I had mentioned earlier in the week that it looked like it was heading up towards its 200-day moving average near the $50 level, and it's rapidly approaching that.